Going a whole lot of nowhere on this, the last day of the quarter. 30 minutes ago into the start of trading, I'm Dani Berger. Matt Miller is out. Bloomberg Open Interest starts right now. Coming up, stocks are on track for their best quarter in 6 years, and chip stocks lead the charge. Meanwhile, the yen hits a 4-decade low as HSBC flags a stronger dollar as a major pain trade ahead. And oil heads for a quarterly drop ahead of another round of peace talks in Doha. Well, the most loved and recently disliked child of this equity market has been chip stocks. It doesn't matter what they've been doing over the past week and over the past month. Chip stocks are still headed for their best quarter ever. It's the AI trade, no surprises there. But now investors are wondering how much further the rally can go as we've seen those chip prices surge. Nvidia's up 0.5% today, Micron down 0.5%, SanDisk that's up 1.7%. And by the way, SK Hynix has done their file to apply for an IPO, so they haven't applied for a U.S. IPO yet, but they have filed. Let's talk more about this story because it's the main driver over the past quarter. Let's head over to the desk because sitting there, joining us now, it's Mandeep Singh, our Bloomberg Intelligence Global Head of Tech Coverage. Mandeep, again, it does feel remarkable considering that chip stocks have had a wobble over the past few weeks, and yet here we are headed for the best quarter ever.
Well, I think it's partly explained by the backlog that these companies see, whether it's NVIDIA or the customers of NVIDIA, which are the hyperscalers. I mean, we are talking about $2 trillion of combined backlog for the hyperscalers. And, you know, everyone questions the Capex increases and how far we have to go. But you have to keep in mind that these companies have commitments. And look, you could say some of these commitments may not come to fruition, but as it stands now, everyone has visibility to revenue growth, which is what they're guiding to, and that's what's driving, you know, the spend. So to my mind, you know, this party keeps going until someone like Meta, which doesn't have a backlog, says, I'm not spending anymore.
Do you think we might be getting closer to that point, or how far away might that point be if it ever comes?
Well, so Meta has a core ads business, which seems to have accelerated partly because of their AI spend. And they are consuming a lot of this AI infrastructure themselves. So from that perspective, as long as they maintain that healthy top-line growth, I think market will be willing to wait for that agentic AI revenue to show up eventually. But if that slows down, I think they will come under pressure to slow down their Capex.
But Mandeep, I know we have like 1.5 months to go until SpaceX reports their earnings, but you and the team have just put together your earnings model for SpaceX. What are your expectations? What are you starting to dig out of this company and when it actually might be profitable?
I mean, the 2 compute deals that they signed right during the roadshow, you know, with Google and Anthropic, those were huge in the context of scaling the AI infrastructure business. And now the Cursor acquisition, the $60 billion they're paying, we think they can actually scale it up to get to a combined ex-AI revenue of around $100 billion by 2030. But really, right now, it's going to be more compute rentals. Eventually, it'll be Cursor coding agent and API sales. And if they are able to execute on that acquisition, they have a path to profitability, which is what we are showcasing in the model.
All right, Mandeep, great research. I'm sure we'll see you same time, same place tomorrow morning, too. Mandeep Singh from Bloomberg Intelligence. Now, another theme top of mind today in markets is the historic slide we're seeing in the yen. The yen now trading at its weakest against the dollar in about 4 decades, leaving traders looking for Japan's next line in the sand for the currency. Bloomberg's Enda Current joins us from Washington. And Enda, this, even though we did get some jawboning from officials, but it feels like a slow bleed. It's certainly not volatile, but here we are at a really weak level.
It does feel like it's going in one direction, Dani. A lot of focus, as you say, in terms of what Japan can do about this, how will they respond. They've had some jawboning from the finance ministry. The question is whether or not they intervene again by running down their reserves to buy the Japanese yen in an attempt to support it. They've done that before. Back around April time, they spent around $70 billion. Expectations are they probably will step in again to intervene, Dani. But the question becomes how effective that will be. Usually there is an immediate market impact for sure. The yen snaps back. But that rally kind of fades out over time because the underlying issues that are causing this decline haven't gone away, and that is the interest rate differential story, the price of oil imports that are priced in dollars, worries about Japanese debt levels, and none of those issues are going to go away in the near term, certainly won't be fixed by intervention.
I was going to say, I mean, how much of this is, you mentioned some of them there, but how big of the dollar and dollar strength is just a driver of this, especially after some of the hawkish repricing from the FOMC meeting? And we're going to hear from Kevin Warsh tomorrow, and notably, Ueda will not be on that Sintra panel. Does fighting it from the Japan side even help at a moment when the dollar continues to strengthen, Enda?
Well, that's right, Dani. So much of this story is dollar strength. Not all of it, as I said. There are some Japanese-specific issues. But take one example. Japan imports a lot of oil. They have to pay for that in dollars. The dollar is more expensive right now. That's hurting them. You look at the interest rate differential between Japan and the Fed. Even though Japan has hiked rates to the highest level in 30-odd years, they're not yet at a level that some people feel they should be that would offer enough support to the currency. And then you look at what's going on with the Fed. We had that very hawkish message from the Fed a couple of weeks ago. Half the FOMC seeing an interest rate hike this year. Chairman Warsh talking about price stability. And yes, we do have Chairman Warsh speaking tomorrow at ECB forum. It will be interesting to see if he doubles down on the hawkish message there. Then we get jobs data in the US on Friday. They're supposed to be a pretty good set of numbers. So it's all leaning towards an ongoing hawkish Fed, strong dollar. That clearly won't help the yen.
I would say that jobs data is on Thursday. I hope you're not working Friday, Enda. It's 4th of July. Come on.
Quite right, Dani. Excuse me.
Enda, thank you so much. Enda Curran from our DC team. And yes, we will be getting jobs on Thursday. I go back to Ian Lingen, who said, you know, we probably could have just done this thing in July 10th. Why did we need to do it a day before? So sorry you don't get an early holiday. Let's turn to oil, though. Brent is trading at $73 a barrel ahead of another round of peace talks in Doha today. U.S. envoys Jared Kushner and Steve Witkoff are expected to attend the talks. President Trump spoke yesterday.
The meeting in Doha is going to be perhaps important, perhaps not. We're going to find out. But we're winning militarily. It's almost won militarily, I would say. And it's really very simple. It's the denuclearization of Iran. We don't want them to have a nuclear weapon, and they're not going to have a nuclear weapon. And they've agreed to that, in all fairness.
Bloomberg Washington correspondent Tyler Kendall joins us now. Tyler, what are we expecting out of Doha?
Well, Dani, at this point, we can actually confirm that both Special Envoy Steve Witkoff, alongside the president's son-in-law Jared Kushner, have now landed in Doha. But we heard from Qatari mediators saying that these will not be direct negotiations. This is going to be indirect talks through the mediators, as Iran's foreign ministry earlier today says that there are still, quote, serious challenges to just implementing the memorandum of understanding, which first needs to be in place before we get to those serious negotiations around what potential curbs to Iran's nuclear program looks like. Because at this point, all the focus remains on the Strait of Hormuz, as overnight we got another reaffirming that Iran wants to maintain its grip over the waterway. We heard from a top Iranian official say that there are still plans to work with Oman on instituting essentially a structure to oversee the Strait of Hormuz. But importantly, this official went further, saying that whether or not Oman participates with them doesn't matter. Iran is going to pursue this anyway. It's going to be something to watch really closely as we start to see more commercial shippers gain confidence when it comes to the Strait of Hormuz. But importantly, they're using that corridor that hugs the coast of Oman, much to Iran's dismay. So this is going to keep coming up as one of those key contentious points. But data analyzed overnight shows us that at least 24 commercial ships with the potential to carry about 11 million barrels of oil were able to successfully transit through yesterday. Dani, at this point, this is being described as those technical negotiations. We're going to have to see where they go from here, because I will point out that President Trump is highlighting some of that domestic pressure to actually get a breakthrough in these talks. Just yesterday, he highlighted that threat against gasoline retailers, and we heard it reiterated this morning, actually within the last hour, from the U.S. Treasury Secretary Scott Bessent, who said that he hopes that gasoline retailers will be, quote, good actors as the administration wants to see those prices come down further.
Tyler, while we have you, the president celebrated what he called his Supreme Court win, especially when it comes to the FTC and allowing him to remove officials from independent agencies, and maybe they're less independent now. We also had the Lisa Cook ruling. What are we expecting? What's left on the docket for the Supreme Court that they're likely to get through today, Tyler?
So, Dani, today is the last day of the term. We are waiting on 4 very contentious and highly consequential cases, but there is a lot of focus on the case for birthright citizenship and the Trump administration's bid to end automatic birthright citizenship through this executive order that the president signed into law on his very first day in office. This is absolutely critical to the president's immigration agenda. However, Dani, he himself has indicated that he doesn't think that the court is going to go his way. We saw this wariness from the justices during the oral arguments back in April. In fact, the Chief Justice John Roberts said that the administration's legal argument here was, quote, quirky. We'll see where it ends up going. The administration says that the citizenship clause of the 14th Amendment should not be applied so broadly to apply to children of undocumented immigrants, whereas those challengers, including the ACLU, have maintained that this is a long-standing legal precedent. Dani, has really big implications, could impact the nearly 255,000 children that are born to undocumented immigrants in this country each year.
Hey, Tyler, thank you very much. And we'll see you in about an hour's time and look at what the Supreme Court gives us. Bloomberg's Tyler Kendall in Washington. Let's get a check on your markets. 20 minutes to go until the start of your cash trade. We started the future session higher, and those gains started to wear out. Again, it is the last day of the quarter of the month. You might get some weird window dressing and some rebalancing, but here we stand, little change on what's set to be the best quarter in quite a few years, despite a not so great month, especially for the Mag 7. 10-year yields are higher by a basis point as Brent crude chugs just a tiny bit higher. We are above $73 a barrel. Let's take a look at some of the single names moving this morning. With that is Isabel Lee. Isabel.
Hi, Dani. Let's take a look at some single stocks moving right now. We're looking at Comcast shares are higher by almost 3%. We have Deutsche Bank and Rosenblatt Securities upgrading the stock to buy. This comes after the planned spinoff of its media business. So analysts say that this could really help with the strategic planning of the company, the strategic flexibility, and could also set Comcast up for more media deals. Although some analysts also say that NBC Universal might prove to be the more attractive target. We're also looking at Merck and AbbVie. So you see shares here down by nearly 0.8% for Merck, and AbbVie, you're looking at around 0.3% lower. So we're looking at this stock because this comes after a bipartisan group of lawmakers, according to Reuters, opened national security investigations into the drug makers. So Reuters saying they're investigating whether chemical trials conducted in China help fuel the country's military capabilities. And lastly, we're looking at Digital Realty. This is a data center. So again, data center is what we're talking about. So they're buying Blackstone's stake in 3 data centers across Northern Virginia for $3.5 billion. So Northern Virginia, as we know, Dani, it's really becoming a hotspot for data centers.
And it is my home. And
yes.
Yeah, it's where I was born. And I honestly talk to people all the time who hate it, that don't want those data centers.
We should go on a field trip. Maybe you can take me around.
Yeah, we can stay at my parents' place. They would love that. Isabel, thank you very much. We'll catch up with you after this commercial break. But also coming up, Nike reports earnings after the bell. Is CEO Elliott Hill's turnaround plans finally starting to pay off? We'll cover that next. You're watching Bloomberg Open Interest. Now to high interest, a look at what's making headlines around the world. With that is Isabel. Hey, Isabel.
Hi, Dani. We're looking at New York City. Their new pied-à-terre tax takes effect tomorrow. So this is hitting second homes above key value thresholds with surcharges that can reach 6.5% of assessed value. So owners are exploring ways to avoid the tax by transferring properties to LLCs or trusts, renting them out, or selling. But lawmakers say that the loopholes are limited and the penalties for dodging the tax are steep. And Susquehanna Investment Group saying it lost more than $70 million in an alleged insider trading scheme linked to China's crackdown on cross-border brokerages. So the firm is suing 100 unidentified defendants, claiming they used non-public information to make over $100 million in profits. The allegations have not been proven in court. And Paraguay declaring a national holiday after it beat 4-time World Cup champion Germany in a penalty shootout. Paraguay's president announced a surprise day of as massive celebrations erupted across the country. Paraguay now faces the winner of France and Sweden on Saturday for a spot in the quarterfinals. I don't really watch World Cup, Dani, but I know that you do.
It was so good. I watched every moment of this game. Germany has never, literally in the history of the World Cup, never lost on penalties. So this was the first time ever. So Paraguay should be celebrating. But Isabel, I don't know if you would know this, but France is like insanely good. They're likely to win the whole thing, and so they're probably going to play France next. So they should be celebrating now.
You're clearly a fan.
Yeah, just a little bit. I was like covered in rain at the England game this past weekend.
Oh, wow.
That's how dedicated I am. I'll wait through the rain. Isabel, thank you very much. We'll catch up with you in just a little bit. By the way, related to the World Cup, Nike is going to be reporting earnings after the bell today. They obviously have some more visibility with the various sponsorships they've been doing. But investors are going to be looking for signs that CEO Elliott Hill, that his turnaround is taking hold, along with any updates on China. And yes, the World Cup. Bloomberg Intelligence senior retail analyst Poonam Goyal joins us now. Poonam, great to see you again. What are you expecting from Nike today?
You know, the focus is really going to be all on guidance. We're not expecting anything momentous. The turnaround is underway, especially in North America. So expecting positive sales there, low single-digit increase, though the rest of the world is going to be down, notably China down in the high teens. So a lot of work still needs to be done. We want to hear what the look ahead is. What is the fiscal 2027 look for Nike, the first quarter? And then on tariffs, tariff refunds are coming in, and Nike has alluded to a benefit that it will expect in the back half of the calendar year. So how much of a benefit will that be, and where are those savings going to be invested? Back in price, they had taken price up, or elsewhere?
Can we just stay on China for a moment, Poonam? What continues to be the headache in the region? Is it just local competitors that have come in? Is it something different? How do they wrestle market share back from the country?
So there's a lot of things that they need to fix in China. First is inventory, the same issue they've had in North America, which there's just too much unwanted old inventory that's not resonating with the customers. They need to clear all that out. That's step number one. Step number two is in the process of clearing out this inventory and the missteps that have caused the brand to tarnish in China, the brand is now viewed as a discount brand. And Nike, as we know here, is not a discount athleisure brand. So they need to rebuild brand heat and brand perception. As those things come into hand in hand and they improve the product flow with new product, which is resonating, they could start a turnaround there. But it's not going to happen overnight. It will take, we think, at least 12 months.
They did announce last week that they're changing the CFO. They have a new CFO who was previously at CVS and Lowe's. The prior one, or the one outgoing one, is still leading this earnings call. Poonam, should that signal anything to markets?
You know, I think the CFO change is notable, but at the same time, I don't think that's the job that's responsible for the turnaround. It'll help with the capital allocation. It'll help kind of ground Nike in its strategy. But I think the real execution comes from Elliott Hill and his team to really drive innovation, speed, and bring brand heat back into the market, which will depend on endorsements and products largely.
So is the World Cup just a big win for them, Poonam, or too early to say so far?
It's still too early to say, but, you know, they are sponsoring 6 of the teams, and so is Adidas. It's a neck-to-neck battle between really the two of them, and regardless of who takes it home, I think just the brand perception that they're building through this tournament is big enough, and the product launches that are coming through is going to drive their momentum in soccer. That doesn't mean that Adidas is going to lose out on it in any way. I think they're both going to gain share through the World Cup.
I still think it is absolutely nuts that like every brand independently decided to do shoes that were literally like the color that I'm wearing. That's been one of the interesting things. Hey, Poonam, so great to catch up with you. I'm sure we'll talk after earnings to get your take. Poonam Goyal of Bloomberg Intelligence. Coming up, Northstar's Nimrit Kang joins me as the first half of 2026 comes to a close after a huge quarter, the best ever for chip stocks. That's on the other side of this break. You're watching Open Interest.
When it comes to hyperscalers, look, it's an arms race. That's why the question is, like, can they actually cut Capex? They can't. In other words, like, you're diving into the deep end of the pool. Because if they cut back, then they go behind others in line that will clearly go ahead of them. Anthropic, OpenAI, ultimately, as they go public, they'll just have more and more cash. And I think that's the reality right now. And to those, the bears will be like, oh, it's spending to nowhere. It's the opposite. I mean, you're essentially building out a new economy for consumers, enterprises, and for the first time in 30 years, the U.S. is ahead of China when it comes to tech.
Wedbush analyst Dan Ives on the AI spending narrative. Let's bring in Northstar Chief Investment Officer Nimrit Kang. Nimrit, great to see you on the last day of a quarter that has been remarkably strong. Best quarter ever for chip stocks, for the index itself. Best quarterly performance in 6 years when the index was bouncing back from a pandemic. It does, though, seem to be that some of the momentum has been taken out recently, especially with the Mag 7 declining 10% this month. How are you thinking about where we go from here?
Yeah, Dani, it's really about, we're seeing two different things happen here in AI. There's rationality that's happening, which is the AI story is becoming broad-based. It's spreading into the economy. We're seeing companies not exposed to AI also starting to see benefit in their earnings, looking at almost close to 15% last quarter, similar pace this quarter. So that's really good. The other side is the market is saying the hyperscalers are not going to make money on their investments, but the companies that are selling them chips are continuing to do well. So that's a little bit of irrationality that we see which doesn't square. We would say, the AI story has legs to run because it's supported by earnings, and the earnings momentum is likely getting broad-based from here.
All right, Nimrit, stick around. We're going to talk more after the opening bell. That's Nimrit Kang. And a quick check on your markets ahead of that opening bell. And we're not doing a lot. We're slightly weaker, but ever so slightly. Again, it is quarter end, it is month end, so you tend to get some weirdsies in this market as we rebalance after a very, very strong quarter, a less strong month. We were down in the S&P by nearly 2%, but still, 10-year yields, those stand just below 4.4% as Brent crude stays steady at $73 a barrel and 20 cents ahead of talks in Doha. On the other side of this break, your opening bell. Seconds to go until the start of trading. You're watching Bloomberg Open Interest. I'm Dani Burger. The end of a quarter, the best one in 6 years. Even better for the chip stocks, their best quarter ever. We remain unchanged this morning. What a snoozy Tuesday, but there's still a lot to play for in today's trade. Dow Jones also little change too. Ringing the bell at the New York Stock Exchange is JP Morgan celebrating this, the last day of Pride Month. I'm going to be honest, when Matt does this, he usually has the returns of every single bank memorized. My brain cannot do that. But I will say that JP Morgan has returned over 100% in the past 5 years. The same cannot be said for this company, Happen Bank, which has only returned 12% in that same time period. You maybe have not heard of Happen Bank because they just rebranded and changed their ticker, which is why they're down at the NASDAQ. They used to be Lending Club, which that I've heard of. I mean, look, I'm not a brand expert, but I don't know why you would change your name if you have a brand that people know. But Happen Club, they're trying to appeal to high net worth individuals, apparently. So you do you, Happen Bank. Here at the market open, Nvidia's up 0.4%. Micron down down now 0.6%, while SanDisk is up 1.8%. Again, it's the end of the quarter, so the trades are a little bit odd. They're not trading as like a monolith, which is pretty interesting. But chip stocks did just record their best quarter ever. But a real question to how much further the surge can go. And let's bring it back in, Northstar Chief Investment Officer Nimrit Kang, because Nimrit, you were just talking about this idea, this disconnect that the market says that the hyperscalers might not get a return on investment, but the things that they're spending on, i.e. chip stocks, are doing well. I just wonder if there is any concern for you that the hyperscalers at some point, if they keep getting punished by markets, will start to curb some of the spending they're doing, or if the mantra will continue to be the risk is underspending, not overspending.
Right. I think it is a circular logic. Your previous speaker pointed out, the hyperscalers have such an incentive to spend because it is a winner-take-all market in some ways. We've seen that happen over and over again with search, with internet, with cloud. So they want to be there. But I think one thing that's missed is these are vertically integrated enterprises. So take example for Alphabet. It's not just spending, it's spending, but also feeding so many of its own businesses. They own the silicon as well. They have distribution, and now they're at 24 times. Similar for Microsoft at 21 times, owns the distribution, doesn't have a model, but that can be easily fixed. So there is a lot of circularity to that, but the big disconnect is how can hyperscalers continue to spend without seeing a reward or return for what they're spending on, and yet their suppliers continue to win? That just doesn't make any sense.
The spending that they're doing, Nimrit, so for now, the equity market, maybe a little bit of wobbles, but still allowing things to happen like a SpaceX IPO or SK Hynix coming over to list here. We'll see how that happens. These bond markets, the type of issuance we're seeing is remarkable. It has been fueled by tech. I asked BR internal AI model about what it's been year to date. IG, $1.1 trillion through the first half. That's already surpassed the full year totals for 2019, 2022, and 2023, and on pace to etch in a new record itself since 2025. High yield, something similar, $213 billion in the first half. So that puts it also on pace to exceed some of the banner years we've seen in the past. Nimrit, do you expect that to change at all? Or are these funding markets going to remain wide and open for the hyperscalers and all these AI-related companies to continue to issue debt?
The experience is the markets remain open until they don't, right? And that's where one of the things that we worry about is the strong correlations between the equity and the corporate debt markets that we're seeing now that were not true, let's say, even 5-10 years ago. So you used to have the corporate investment grade as a diversifier in a way to your equity exposures. Now you're basically taking the same exposure all the way through, and that is a little bit of concern. That's why it is, incumbent upon people like me to make sure we know what we're buying when we are buying into some of these different bond funds and ETFs and corporate grade funds.
Does it change the attractiveness? Obviously, these funds that you're referring to still are underweight tech, especially compared to the equity market. They still are heavy finance and financial firms. But does the profile and the interest and the diversification properties of putting bonds, of pairing that with equities change as you do start to get a steady tick up of weighting towards tech companies?
Yeah. So I think that ultimately it comes down to if you're playing at different parts of the same capital structure, you're not getting that diversification. I think the one way to think about it, Dani, is yes, all of this works when we are, the market is still very positive on the AI build out. All of this works. When it sours on that, you're not going to see the kind of benefits that you need to see from your fixed income holdings. That's how we would think about it. I hear your point. They're still underweight versus the equity exposures, but we're not looking for them to match the equity exposure. That's not the intent. The intent is to offer a diversified benefit. You talked about financials. So many of the financials are involved in funding this infrastructure boom. So I'm not really sure that we're going to get the benefits that we're looking for or we have historically relied on.
Nimrit, I was just looking at earnings expectations from the sell side. If you look bottom up, basically what they're targeting would imply something like a 20% rally through year end for the S&P 500. Plenty of the sell side has targets that are above 8,000. What are you expecting? I know you don't give a price target, but I just wonder how bullish or not you're seeing through the end of 2026.
Yeah. Where we're bullish in is the diffusion of the AI into the rest of the economy. One of the things that we watch very closely is the rail traffic. Dani, the rail traffic is now finally picking up 5% in the first few months of, now we're ending June, which is very positive. That's telling you that all the momentum that we've seen, all the talk we've seen of data center construction build up, that's finally translating into, movement of goods across the United States, getting the materials to these data centers. So that's all very positive. And there's a huge trickle down effect that's also happening. And that we see in retail. And, that's the other part of the rail traffic that's been strong is intermodal related to retail. And all this wealth effect from people who have benefited from the equity markets are continuing to support the retail spending as well.
Hey, Nimrit, we're going to have to end it there. Thank you so much for joining. Great to see you this morning, Northstar's Nimrit Kang. Let's get a check on your equity market. That's going a whole lot of nowhere, but good news, it is slightly higher now. It was slightly lower. The breadth ain't great, though. Majority stocks are down 361, are trading to the downside. So some of these individual names that we're looking at, NVIDIA adding the most points, not because it's having a huge rally, but it's really just because it is such a large stock. So adding 8 points to the S&P, which is only up 5 points so far this morning. Most of the chip makers are having a good day. AMD SanDisk, Lam Research. Intel is up there too. To the downside, you have Eli Lilly, Alphabet, Meta, Procter & Gamble, IBM, but still some of these Mag 7s really struggling to get any sort of gain. They have corrected in the month past with an equity index that's down by about 2% as a whole. But again, the quarter still looks good, even with the most recent wobble over the past month. So you have some of these more kind of bond proxy and safety stocks, to just be frank, at the bottom. Real estate, utilities, consumer staples, those not doing well, as infotech is the top returning sector. But again, that's largely NVIDIA. If NVIDIA's up and the chip stocks are up, so too will tech. Coming up, we're going to talk more about chip stocks, sky-high prices for memory chips. Traders are assessing the staying power of that rally. We're going to catch up with Ed Ludlow next, also on some data center deals that have just hit the market. You're watching Bloomberg Open Interest. A check on your markets this morning, and we do go to a rally thanks to NVIDIA's gain and some of the chip makers. Not a whole lot, though. We are headed for a very strong quarter. We're going to get into that in just a moment. The Philadelphia Semiconductor Index is up 1.5% to end the quarter, with Brent crude little change, just above $73 a barrel. Let's get you some top calls now. Here with that is Bloomberg's Isabel Lee with what the sell side is saying this morning. Isabel.
Hi, Dani. First up, Oppenheimer. It's turning bearish on big banks, cutting Goldman Sachs, Morgan Stanley, Citigroup, and Bank of America. The firm says that these banks are highly exposed to swings in sentiments, and it worries that the market is not pricing in the risk of another fear-driven downturn. If you're looking at a screen, they're all in the red. So Oppenheimer prefers alternative assets like Ares, Blackstone, and KKR. Next up, you're looking at yes, that's why they're green on the screen. So next up, we're looking at Daiwa. The firm upgraded Honeywell after its aerospace spin-off. The stock is enjoying a little pop there, up by 1.3%. So the firm pointed to solid earnings, growth potential, and a more focused portfolio. And finally, we're looking at Piper Sandler. They're double upgrading Block, but I guess the stock is not reacting because it's down by 1.3%. Piper Sandler said that investors are underestimating the company's earnings potential. The firm says double-digit gross profit and AI-powered efficiencies will help boost margins over time. Maybe the stock later will react, Dani, but sometimes you do get that inverse reaction. Dani.
Isabel, thank you very much. Always a bummer for the analysts. It's like, why didn't my call work better? We'll catch up with you a little bit later in the show. Isabel Lee there. Now, it has been a huge quarter for tech. Chip stocks in particular had their best quarter ever due to insatiable demand for AI technology. There has been a lot of recent volatility, though. Now investors are wondering, is this still a super cycle or the start of a choppier run? Let's bring in Bloomberg Tech host Ed Ludlow. Ed, I have to say it is remarkable for them to log the best quarter ever, despite the fact that they were down last week for the worst sell-off since that Liberation Day sell-off. I just wonder, does it seem like we're on shaky ground for these chip stocks now?
You know, the way that we frame it in the Bloomberg story is really interesting, that, you know, it's 82% gain in the quarter and 95% gain year to date, but we're only halfway through the year. It's definitely a different wave of momentum. So this is kind of part two of the AI wave of this decade, where memory and storage have led those gains, Seagate, Micron, etc. It has not been NVIDIA and the other computer or AI accelerator providers that have driven this part of it. What's interesting is, like, there's also a cautionary tale in the data. I don't know if you guys have the longer term chart that you can put back again, but, you know, this is the best quarter ever. But if you go back to the March quarter of the year 2000, it was a kind of similar story, that semiconductors would kind of have infinite momentum because of the advent of the internet. And that was like peak dot-com bubble. But the belief at the time was that people would buy computers and there would be growth in computer markets forever and ever. And that just, of course, didn't happen. So there's a long way to run in the second half of 2026. And capital expenditure growth is where people watch for to try and decide if that continues.
I also just wonder, as sort of a sentiment check for this market and where we are, how big of a deal SK Hynix is going to be. They applied to file for a NASDAQ IPO, so like the application to do the application, but it is going to be one of these biggest ever listings, Ed, at a moment where a lot of listings are coming to market.
So there's like two parts of the story, though. SK needs money so that they can increase fab capacity for memory. SK dominates high bandwidth memory. I think they have almost 60% market share. But what's really interesting about what you just said, right now the SOX is trading at something like 25 or 26 times forward earnings. Historically, it's more like 15 to 19. So we're not like that far off kind of the norm. But one reason that SK is looking at listing US shares and having ADRs is that they traded a valuation discount to Micron, which is actually pretty reasonably priced. SK is basically saying to itself, like, if we give ourselves some exposure to the American investor, like, will we get the credit that we think we're due on the valuation and close that gap to peers Micron and Samsung, given that they are the main beneficiaries of this trade right now? But also, again, go back to capital expenditures. There's a big distinction between Capex receivers and Capex deployers. And, you know, it's just logical that the memory names would be big beneficiaries of continued Capex growth.
Ed, elsewhere, just in this ecosystem, there was a story about Blackstone offloading the stake in 3 of their Northern Virginia data centers. I mean, this has been interesting because they've held this for less than 3 years, I believe. And just the returns, I think, are going to be interesting on these various deals. I wonder, you know, what you're looking for, especially because this is a region. I mean, it's a region I'm from, but there's been an intense political backlash to building data centers in Virginia.
So from Blackstone's perspective, this is very much monetizing the stake and getting returns rather than exiting that market altogether or exiting even the partnership that was put in place. Essentially, like, the deal structure is that Digital Realty pays them cash, like $1 billion, but also $2.3 billion of their in stock that Blackstone then goes and sells immediately. It is absolutely true that that is data center land over there. And that, you know, as we get towards the midterms, that either the NIMBY movement or however you want to put it, there's a general PR problem that the data center industry has with Americans because they feel the pain of it and not yet the benefit. And there's a long-term academic debate on how deflationary a big data center build-out could be if the bigger companies take the capital burden. But right now, this is just Blackstone playing a market that it identified quite early. And is getting a healthy return on those initial investments. Even if, I think you said 3 years, right? It's been a pretty short horizon for returns.
And it's something John Gray has talked about, basically saying that Blackstone is an AI company now. And if you want to buy AI companies, you should be buying Blackstone. But just to get back to the politics of it, Ed.
Yeah.
This idea of it bringing jobs, because I know that this is something the governor of Virginia himself, an ex-private capital guy at Carlyle, has talked about. I mean, what is the reality? Don't these things at the end of the day, sure, you maybe need thousands to build it, but then it's like some HVAC people tinkering around when all is said and done?
Yes. Yeah, you need an army, a workforce to build it, not to operate it. You know, and actually the design of the modern data center is all about, like, ultra efficiency, making it as easy for as few people as possible to swap in and out trays, etc. But what's really interesting is why we track the utility data on data centers that are contracted to be built, those that have actually been built, and those that are being cancelled, right? So, like, you know, that's the economic story, that there's potential economic gain and jobs. But a lot of these projects, there have been no shovels in the ground at all. And so, like, that's one area that people are frustrated with, again, with the near-term energy inflation impact that those that are coming online are having in zip codes like the one Blackstone's operating in.
Hey, Ed, thank you very much for all of that. Really looking forward to Bloomberg Tech. Airs at 11 a.m. with host Ed Ludlow. Coming up, the hedge fund industry is booming, and Izzy Englander's Millennium is placing its bet on the next wave of talent. Well, the latest moves coming up. This is Bloomberg. Welcome back to Open Interest. Let's get a check on your equity market about 20 minutes into your trading day, and we move higher on this, the last day of the quarter. We're up by 0.75% for the NASDAQ. The S&P goes up about a fifth of a percent. The Russell 2000, despite the fact it's been outperforming this quarter and this month, it starts to decline. But again, it's the quarter end, so you get some rotations, you get some window dressing, all of that good stuff. The Max 7 in tech is having a pretty good day. And then the dollar versus the yen. The yen looking at one of the weakest levels in 4 decades. The slow bleed weaker. We've already got job voting. Will the BOJ do anything? Notably, Ueda will not be at Sintra at that big central banker panel that we're going to get tomorrow. Micron is in the red still, down 0.1%. Intel's, a lot of the other chip makers are doing well, though that's up 2.5%. And Rocket Lab, that's also trading higher by 1%, making an acquisition yesterday, trying to be vertically integrated when it comes to the world of space. And speaking of which, SpaceX, slightly negative this morning. Let's talk about hedge funds. Money is pouring back into them, with more than a half of investors planning to increase their allocations. Just one sign of that momentum. Izzy Englander's Millennium backing a new quant startup founded by former Citadel researcher Paul Dew. Joining us now is Bloomberg's chief hedge fund correspondent, Nishant Kumar, who reported on this story. Nishant, we can talk about the overall trends in just a moment, but walk us through exactly what Millennium is betting on here.
So Millennium has been one of the most prolific backers of not only traders internally, but going out and scooping up talent and hedge funds externally as well, either exclusively or writing big checks to startups or the funds in existence. So, and this has been the trend. The biggest hedge funds don't just want to hire the smartest people anymore. They are increasingly acting like, I can say, venture capitalists, writing these billion-dollar checks to talented traders to build their own businesses outside the walls of Millenniums and many such firms right now.
What's the logic of doing that versus when you have a pod shop? Like, aren't they kind of effectively the same when they're running their own little pot of money, whether they're internally or externally?
They are, but not every talent is willing to come in-house if they already run their successful businesses. It all boils down to the war for talent that has reached a point where, hiring alone no longer works. Top traders are expensive. They are tied up in, years and months of non-competes. And the biggest hedge funds have more capital than they can possibly deploy with internal talent. So they are taking the next best option, backing talented managers on the outside instead.
The fact that they have so much money, Nishant, this is what I was talking about in the intro, that your story highlights this Bank of America data in allocators, and 51% of them saying that they want to increase their exposure to hedge funds, which is the biggest of the asset classes listed here. What is it about 2026 that hedge funds are back in vogue and are popular than so many of their other financial peers?
Well, you can blame it on frothy markets, if you call it frothy. Equity markets at peak, there are so many troubles across the world. So hedge funds, at least theoretically, they can be a good hiding place if you are anticipating some kind of troubles ahead. And that's what we have seen, like the biggest asset managers, biggest pension funds, sovereign wealth funds. They are tweaking their portfolio. So even 1% move in favor of hedge funds is a big amount. And this is coming at a time where, hedge funds are no longer taking money. So you call it Millennium, Citadel, D-Shaw, most of the large hedge funds, they are not actively raising capital. So where do they deploy this money? And that's the biggest challenge and problem. There is no capacity in the hedge fund space, at least with the bigger firms, to take in another $10 billion.
All things considered, probably a good problem to have. Nishant, thank you so much for joining. Excellent story. I highly recommend everyone go read it. That's Bloomberg's Nishant Kumar. Coming up in the next hour, JoAnne Feeney of Advisors Capital. She shares her top picks as we close out the quarter. Plus, we're going to hear from the CEO of Chuck E. Cheese, Scott Drake. The E stands for entertainment, if you did not know. And then we head to Sintra for a conversation with ECB policymaker Ollie Rehn. That's coming up in hour 2 of Open Interest. Last day of the quarter, 30 minutes into your trading day, we are moving higher in a quarter where we're on track to post our biggest gain since June 2020, up 14%. For this equity market, largely has been led by the chip stocks, which are on track for their best quarter ever. Now, there have been some recent wobbles in days past. This past month, for example, the Mag 7 correcting down more than 10%. But first, crossing the terminal, we have some economic data, both consumer confidence and May jobs openings. Joining us now to break down that data is Bloomberg's Michael McKee, Bloomberg International Economics and Policy Correspondent. Mike, what are you seeing?
Well, we're seeing Americans a little more disappointed in the way the economy is going than we anticipated. And we're also seeing better than expected JOLTS job openings. They're down from what they were in the month of down from what they were in the month of May. These are the latest numbers: 7,594,000 down from 7,618,000 in April. The quits rate is 1.9%. That is unchanged. So some strength in the jobs numbers. Now we got the revision to the JOLTS number, and we've actually gone up a little bit, 7,594,000, as I said, and the revised April number is 7,585,000. So up by a few. There's more job openings out there than thought. Now, in terms of consumer confidence, 91.2, that is down from 93.1 as an initial estimate, but 90.6 is the revised. So it's up a little bit, but both numbers are not very strong for consumer confidence. The present situation, 116.4 from 121.2, and the expectations index is unchanged at 74.4. So at this point, what we've got is consumers still reacting to the gasoline prices, I would imagine, even though they came down during the month and people thought that might lead to something.
How does this all set us up for Thursday's jobs numbers?
Well, it does suggest that at this point there is some hope that the numbers will be strong, as they have been in the last couple of months. I'm looking right now just to get the jobs numbers in terms of the Conference Board, and we do see almost no change in the jobs plentiful numbers, and jobs not so plentiful goes down. So people are still thinking that there's a reasonable labor market out there, even though it's not a very strong one. And that is a sign that maybe we'll see some strength on Thursday.
Yeah, don't you make us work on a Friday, on a 4th of July Friday.
I would never do that.
Michael McKee, thank you very much breaking down the latest data. We also have some other news from the Supreme Court. The Supreme Court just ruling allowing states to ban trans athletes from female teams. Joining us now from the Supreme Court is Bloomberg Washington correspondent Tyler Kendall. Tyler, so we have this ruling, and what else are we expecting today?
Yeah, so beyond this ruling, we have this was actually two rulings put into one decision. These were two court cases, one in Idaho, the other in West Virginia, that came out from the Supreme Court already. Dani, we have two other cases that we're watching for. One has to do and deal with essentially campaign finance that could really impact how we see the political parties fund campaigns as we head into the midterm elections. And then the last one that we are waiting for has to do with President Trump's executive order seeking to restrict birthright citizenship. Unclear how that campaign finance one is going to shake out, but there seems to be a sense here on the ground, and due to the signals that we got from the justices, that they are not going to be in favor of President Trump's EO related to birthright citizenship. We'll have to see how they ultimately rule, but we've even heard from President Trump himself essentially bracing for this not to go in his favor. But Dani, it has really consequential and broad-ranging impacts. It could impact the nearly 255,000 children that are born to undocumented immigrants each year in this country. So it is definitely one to watch, and one that is central to this administration's immigration agenda, including as we head into the midterms.
Let's also now bring in David Weston, host of Bloomberg Wall Street Week, who's been alongside us for all of these monumental Supreme Court rulings. David, we can talk about what we might get in a few moments' time, but I just want to take a beat on what happened 24 hours ago here, too, now that we've had a day to think it over. I mean, this is a Supreme Court that gave the Fed a deliberate carve-out over other independent agencies, with which the administration does have the allowance to let top officials go. I wonder how you're interpreting that, you know, as the day has gone on, about that deliberate carve-out.
Not a big surprise, because in earlier decisions they said the Fed might be different. The question, I think, Dani, for me is how different is it? How big a carve-out is that? Because when you actually read the opinion carefully, it says, yes, you have to give some notice, you have to give a chance to respond, and it also implies, I think the Supreme Court says, that there has to be a fairly rigorous standard about for cause in dismissing a Fed governor. But on the process side, it's pretty skinny. It basically says you got to have some writing, got to give them a chance to respond. It's not clear how much will go on. And it looks like there's going to be further litigation, and we'll have to see exactly how much of a right Ms. Cook has to really defend herself.
Okay, David, Tyler, don't go anywhere because we are expecting a consequential ruling on birthright coming from the Supreme Court in just a few moments' time. While we wait for that, let's get back to markets as stocks advance to end the best quarter since 2020. Joining us now is JoAnne Feeney, portfolio manager and partner at Advisors Capital Management. JoAnne, I feel like it's worth just doing a beat on what we heard from the Supreme Court yesterday. We did get this deliberate carve-out for the Fed, but I wonder if the stakes have risen for you when it comes to Fed independence, that perhaps that this is a distinction that over time might get more challenged, just given what David was saying, the thinness of allowing Lisa Cook to, yes, stay on, but to really be able to be challenged by this administration if she's at least given notice and ability to defend herself.
It's up in the air, Dani. I think investors all hope that the Fed independence will be maintained, but that decision didn't really carve that into stone. So we're going to have to wait and see. Clearly, there's room for the administration to take further action depending on which way the court case goes or even which way it doesn't go. If they can, conjure up a reason for the dismissal of a Fed governor, that would point clearly to less independence, which would point clearly to higher systemic inflation, which is not good for the economy. It's not good for investors.
At least the fact that she can stay on perhaps gives Chair Kevin Warsh some breathing room as he's set to speak at Sintra tomorrow, his first global appearance since becoming Fed chair. JoAnne, are you expecting this to be a market event at all, considering this is a Fed chair who has tried his hardest not only to not give forward guidance, but also his thoughts about the past and the present, really?
I think he's going to be largely consistent with what he said at the press conference recently. He's going to reiterate, it's likely he's going to reiterate his focus on the inflation issue right now, but he's also going to reiterate his focus on data dependence and that they're looking for more real-time data, which, points to the Fed likely remaining on hold for a while, particularly with gas prices coming down, oil prices coming down. Is going to want to see how that plays through. There don't seem to be too many areas of inflation running high, except for that, impulse. And that impulse, by the way, didn't just go to gas prices, but it went to transportation and therefore to retail costs. But if all that washes out, there's no reason for the Fed to move higher at this point. Particularly with the strength in the labor market, the low hire, low fire, there doesn't seem to be a lot of weakness on the labor side. So that, tends to point to the Fed staying put. The other SCOTUS decision I think is more problematic and maybe not getting enough attention, which is the overturning of the Humphreys executor decision from 1935, I believe it was, which allows any president to fire at will the heads of independent agencies. These are the agencies that set regulations and other things. They implement the laws that Congress has passed. And if we have a situation where laws can be implemented in a different way, where regulations can change as the administrations change, that takes away a lot of the stability in which corporations have to invest, whether it's emission standards for automobiles or drug approvals could be reversed from one administration to the next. It really creates a much bigger uncertain environment, and that tends to depress investment, which tends to depress growth. So I think that's the most important decision that was made yesterday that really investors should be thinking about.
It's a great point, and it's one David Weston talked about yesterday too, JoAnne. At the same time, though, investment has been going on very strong from corporate America, specifically around AI. It's some real concerns that you're flagging. But does it matter as long as this AI build-out is happening?
Well, the AI build-out is happening because the opportunities look so incredibly transformational, and because the companies doing the data center build are seeing the demand for the AI applications that they are enabling. And as long as that continues, we're likely to see years of investment into that space. The question about the change in the ruling on Humphrey's executor is about the future. And, will a new administration come in, for example, that clamps down on AI model use, on its deployment? That's the nervousness that companies now may run into in the future. For now, I think there's a widespread agreement that the benefits of AI are really significant, even as there's a lot of discussion about perhaps there should be some regulation around it. So it certainly does inject some more uncertainty. But for now, we're in a situation where the demand is running so far ahead of the availability of these resources that we're likely to see the investments continue, which is why we like companies like Broadcom and Nvidia and Palo Alto, because cyber threats are going to grow. So there's still a lot of room for investors to take advantage of this wave of AI investments.
I was just thinking of this idea that you're talking about, of it allows the government to get more involved, especially in corporate America. But even without this ruling, JoAnne, it's something that's been happening from both sides, from both the left and the right. It's this kind of horseshoe of politics, which is coming back on this more populist message and this more involved message. And we're seeing it again in AI, with the government talking about taking stakes or trying to turn off the switch on the most advanced models. JoAnne, I wonder if more investors should be thinking about that and the type of volatility that introduces into corporate America.
Well, right, Dani. And now with this decision, we could have really stark swings in the regulations around AI and other issues, whether it's environmental or labor or mergers and acquisitions. These things can now change potentially from administration to administration. And it's that instability of the ground rules for investing that I think are going to have a dampening effect on investment. So it's more important than ever for investors to remain well diversified, that is, to own opportunities across multiple spaces in the investing world. We like some opportunities in consumer staples, even thinking about some of those as real appreciation drivers, like a Target or a S.J. Smucker, for example, which have done well for our balanced clients this year. That helps when things sort of tail off because of uncertainties, whether it's the underperformance of an Amazon, for example. It's really important to build these highly selective, diversified strategies for clients.
Hey, JoAnne, this has been really fantastic. Thank you so much for joining us this morning. JoAnne Feeney of Advisors Capital Management. Let's get a check on your markets this morning, about 40 minutes into your trading day. Again, headed for a very strong quarter, the best in about 6 years, as the semiconductor index also up another 3%, despite some of Micron's earlier weakness. That's headed for its best quarter ever. Brent crude stays at $73.34. Let's get a look at some of the other movers on our radar this morning. With that is Isabel Lee. Hey, Isabel.
Hey, Dani, you're looking at green on the screen from Nvidia to Micron to SanDisk. They're up for the day, and they're also enjoying their best quarter ever in history. This is driven by demand by AI equipment. But as you've discussed many times in your show, investors are questioning whether the rally still has more room to go. But for now, this is quite an accomplishment because it's the best quarter ever. We're also looking at Merck and AbbVie. You see the stock here in the red, down by around 1% for both of them. So Reuters reported that a bipartisan group of lawmakers are looking into the potential involvement of these drug makers. They're investigating whether clinical trials conducted in China help fuel the country's military capabilities. So you're looking at red on the screen there. And lastly, we're looking at Comcast. The stock is up by 0.5%. They're getting an upgrade to buy from Deutsche Bank and Rosenblatt Securities after the company announced plans for a spin-off between NBC Universal and Sky. Those are your morning movers. Dani?
Isabel, thank you very much. Coming up on the show, sovereign wealth funds are pushing further into private assets as market risk challenge their traditional portfolio mix. We're going to discuss next, plus keeping an eye out for any further rulings from the Supreme Court. All of that to come. This is Open Interest. Let's get you some high interest stories. A look at what's making headlines around the world. With that is Isabel Lee. Hey, Isabel.
Hi, Dani. President Trump envoys Jared Kushner and Steve Witkoff are in Qatar for indirect U.S.-Iran talks. Qatari officials say there will be no direct meetings with Iranian counterparts and are downplaying the prospects for a major breakthrough. Meanwhile, Iran says key issues remain unresolved, including frozen assets and the Strait of Hormuz. And a simple mix-up is costing investors a lot of money. South Korea's Mirai asset accidentally failed to submit over $1 billion in client orders for SpaceX record-breaking IPO after confusing an early sign-up with the actual order deadline. The firm apologized, and regulators are now investigating what went wrong. And retail investors are buying stock market dips at a record pace this year. That's according to Citadel Securities. They said June is on pace to be the firm's biggest month ever for retail activity, with investors increasingly focused on semiconductors and broad-based ETFs. Not a huge surprise there, but still a record. Dani, back to you.
Isabel, thank you very much. We'll catch up with you in just a bit. Let's turn to private markets now. A recent survey from Invesco shows that sovereign wealth funds, the world's biggest public investors, are planning to shift more capital into private and less liquid assets this year. Let's get more Bloomberg senior reporter Silas Brown. Silas, it's something that we have talked about, and all the panic over what retail is doing. Institutional demand still looks incredibly strong for this asset class.
Yeah, it's blessed relief for the private credit managers that both you and I speak to. I think it does speak to a growing divergence between the retail part of the market, which has grown particularly concerned about software exposure and all of the things that we've spoken about before, and institutional investors that are still going through a kind of broader shift in allocation away from public markets and balancing towards private, but also seeing this in some instances as a buying opportunity. You know, even a little bit of volatility is quite an attractive time to invest in private credit.
One of the things that I immediately thought of when I saw this study was, isn't it the case, Silas, that because returns have been low, investors haven't been getting their cash back, that they've kind of curtailed how much more they want to put into private markets? Is that not the case anymore?
Yeah, so there's a fierce debate going on within private equity, where private equity funds are not wanting to sell their prized assets at depressed values, but also simultaneously wanting to fundraise and get more money from their LPs. The LPs want their money back before they give more. So that sort of debate is rattling on. In private credit, due to the kind of nature of refinancing credit loans, it's less of a debate on the credit side. But yeah, that's still a debate in full force.
So what are we seeing from the fundraising numbers we've gotten so far from some of these funds, Silas? We need to wait for the next earnings cycle to come through, but do they still look very healthy?
Yeah, so I think you're also seeing a bifurcation in private credit, as well as actually private equity as well, of the leading firms that are, I guess, have the longest tenure, but also strong performance, getting larger and larger funds. You're seeing that in Europe and the US, and then a kind of tail that are flattening out. I think big LPs are looking to consolidate their GP relationships and choose, I guess, like back the winners, and they're normally defined as the largest players with the strongest track record. And so I think, if you speak to the likes of Blackstone or Ares or some of the kind of top tier managers, you'll see that they actually have very, very strong fundraising cycles at the moment. If you go further down the pack, I'm pretty sure that's probably not as rosy.
Yes, clear divergences in these different managers, Silas. But one of the other divergences I'm wondering is just like how much AI exposure these funds have, and if those are the winners. I mean, in the story, they cited a Middle Eastern sovereign wealth fund that basically said, "I'd rather play AI through private markets than public markets."
Yeah, so I think, again, we're speaking about great transitions and, transitions from public markets to private markets. But I think also private markets are also going through a transition themselves away from legacy software SaaS, which really defined the last decade of investing, both in private equity and private credit, to more AI-driven opportunities. And I mean, that's a somewhat kind of counterintuitive idea because one industry is seeking to disrupt the other. But ultimately, yes, I mean, I think it's probably fair to say that the next 5 or 10 years in private markets will be defined by how the industry can handle and attract opportunities from the AI industry.
Silas, thank you very much for that. Always a pleasure to see you, Bloomberg's Silas Brown. Later this hour, Bank of Finland Governor Olli Rehn will be joining us from the ECB Forum in Sintra, Portugal. Francine Lacqua will be there as well. Speaking to Olli Rehn, this is Bloomberg Open Interest. All right, we have another decision coming from the Supreme Court this morning, voiding political party spending caps. This is a win for the GOP, something that they have been pushing. We're still waiting for a birthright case. Let's get the details now with Tyler Kendall, our Washington correspondent who's outside the Supreme Court. Tyler.
Yeah, hey, Dani. So the Supreme Court is voiding political party spending caps. This is a win for Republicans, and it's really considered to be monumental for campaign finance as we head into November in the midterm elections. I can quite literally see the Capitol building behind me because we know that the balance of control of Congress is hanging in the balance on this. Now, this case was the National Republican Senatorial Committee, the NRSC, versus the FEC, the Federal Election Commission. And a fun fact about this case was actually first brought in federal court in Ohio, which means that Vice President J.D. Vance is actually a plaintiff on this case because he brought it when he was then candidate J.D. Vance running for Senate in 2022. Republicans here were challenging a federal law that limits the amount of money political parties can spend in coordination with a candidate in office. This is known as a coordinated expenditure limit. Think of it as a cap that they're able to coordinate between the two. And Republicans argue that putting that cap on it violates the First Amendment because it doesn't allow the two sides to coordinate on political messaging in TV ads. For example, a quirk of this law is that these candidates get a preferred rate when it comes to TV ads. But Dani, because we saw this law overturned, party committees in effect will have access to that far cheaper advertising rate, which means that fundraising can go even further than it already does to influence votes as we head into November.
Still around the table with us is David Weston, the host of Wall Street Week, with his extensive legal background and knowledge. David, this just adds to Citizens United. I guess the difference was that was independent spending, and now, as Tyler was pointing out, this is coordinated.
Yeah, I think people who would not favor the decision was it's a further erosion of limitations on campaign contributions and spending. I mean, we already had a situation where a political party could contribute sort of in parallel with, but could not coordinate with the campaign. Now they've taken that down and said you can do it because they say the First Amendment gives you that right. So, yeah, I think it's an extension of Citizens United. And the question, I think, really is, okay, what comes next? There are still some limits on campaign contributions, and I'm sure there'll be further challenges now.
What's left? What's left?
Well, how much a person can contribute to a campaign, for example. Right. You're limited how much you can give to a campaign. The whole theory, as you know, Dani, is a corruption issue. Whether it gives rise to a quid pro quo, I'll give you so much money that you'll do something for me when you're in office. And that's the question I think the court addressed here and concluded that this did not really cross that line. I also will say the question will be, does this favor Democrats or Republicans, particularly as we go into midterms? I think the received wisdom was in the short term, it'll favor the Republicans because they have a lot more money in their war chest right now. President Trump has been a great fundraiser, without a doubt. But typically in these things, the other side catches up. And the one thing I'll guarantee you right now, there are fundraising requests going out from the Democrats right now for the Democratic Party saying you've got to contribute now because look at what the Supreme Court did.
I was going to say, but between this and the ruling we got on allowing states to ban transgender athletes from women's sports, I'm sure that will be a large selling point. And going again on this idea that there are still some other limits, is this not at a Supreme Court that between this and Citizens United is effectively saying money is speech, and curtailing it in any form is curtailing free speech?
That's just exactly right. Once you said that there could be, frankly, corporate speech, not just individual speech, but corporate speech, right. Organization, it's really hard to draw the line. And Citizens United crossed that line, and we know what happened in the wake of that. So I think, yeah, they've basically said it's going to be First Amendment. You can question whether that's a good idea or a bad idea. But the real problem here is typically if it's a bad idea, Congress can get together and say, oh, we don't want to do that anymore. This is one that says, no, it's the Constitution. So even if Congress adopts limits on campaign spending, you can't adopt some of these limits, such as restricting a political party being able to participate in the campaign.
Tyler, let me bring you back in because David made an excellent point. We're approaching midterms. Does this look like it specifically will be aiding the Republicans as they fundraise and spend and get out and attempt to retain Congress?
Yeah, Dani, at this point, it does appear to be a boost to Republican efforts. And at this point, it could kind of mean two things. One is that we know that Republicans actually already have a pretty substantial fundraising lead when it comes to the midterm elections. President Trump has amassed a absolutely massive war chest when it comes to political fundraising, and perhaps we'll see some more of that money going towards local candidates to help bolster them in the races, because as you well know, the margins in Congress right now are so incredibly thin, and Republicans are dealing with a lot of headwinds on the top issue for voters, which is of course the economy. That is why we have seen President Trump take steps recently, including just last night, reiterate his push for gasoline retailers to help bring down costs, because we know how potent the issue of affordability is, as it has only been compounded amid the conflict with Iran.
I'm just looking at, as I know, David, you are through this, the SCOTUS blog, and Kagan in her dissent talks about this idea that you did, the idea being to prevent corruption. And she says that essentially they're now just counting on disclosure. Is that a right way to frame this, that the majority ruling has basically said, that was Tyler there getting sorted, the court has basically said that corruption isn't a problem because there will be disclosures, and that is enough?
Well, certainly that's one of the arguments. As you know, that's the way it works, as I understand it, in the United Kingdom. Basically, there are not restrictions. It just has to get disclosed. And the basic theory is it'll discourage people from doing things they shouldn't be doing. So that clearly is the argument. I also should point out, this is overruling, as I recall, a 1983 precedent. So this is overruling a precedent. There's a back and forth I can see here between the justices. Are we really overruling it or not? Why don't you just admit to what you're doing? That said, in general, when you talk about stare decisis, the rule of not overruling precedent unnecessarily, typically in a constitutional case, which this is, the Supreme Court is more willing to overrule because the Congress can't fix the problem. So it's not entirely surprising, but it is overruling a 1983 decision.
So just taking a beat on what we've gotten so far over the past day, David, I know you were listening to JoAnne Feeney, too, and her talk about the volatility that we've seen introduced for corporate America, and specifically about the Slaughter case and allowing regime changes when you get them in the top office, for that also to occur in agencies. And I wonder going forward how you are thinking about that volatility and what it introduces for businesses.
Well, in painting it with a really broad brush, I mean, the thing that's coming across, I think, right now is elections have consequences, really big consequences. And now today we're told, and by the way, you can do what you need to affect those elections to have those consequences come to play. And it's not too surprising that President Trump might like that result, that elections have consequences. And that's what we're seeing. As you were saying, Dani, I wonder about what this means for business, because in general, businesses, less regulation's better. I'd rather be free to do things. And with a Republican, particularly President Trump in the White House, pledging to deregulate, you might say, oh boy, this is really good. But there's going to be another election, and the next election could go the other way, and I wonder how business will feel. The main thing is, and this is what you and I were talking about, is I think this increases the volatility of the rules and regulations that business is facing. And in general, business doesn't like a lot of volatility. They like a lot of predictability.
Sure, but the point that I also was making to JoAnne is, like, yes, this is an administration that has been trying to slash regulation, but they've also been taking stakes in Intel. They've talked about doing that with AI. They've talked about curtailing the most advanced models. Is this not an administration that the fear of what Democrats might do in office, the Republicans are already doing that to some degree?
Yeah, it's industrial planning, which had a bad name in the United States for many, many years. We didn't want to do that, and this is a form of industrial planning. But and it's an overused analogy, but it feels like the referee is getting down and playing in the game. You know, instead of being the referee that says these are the rules that you invest by and how you make money and don't make money, actually now they're going to participate in the game. They put the thumb on the scale. That may be good. It's worked in some places. And the irony for me, Dani, actually in a much broader sense is, are we becoming more like China? Actually, China is, we criticize China for subsidizing and really supporting their industry so much, picking winners and losers, and we have a long way to go before we're anything close to China. But we're moving in that direction
with them, right? Like, isn't that part of this idea? We're in arms race, especially when it comes to AI. So maybe we beat China by looking more like China?
Well, that's what I wonder, is whether that's what we're doing. And maybe that's a good strategy. I mean, maybe that's a good strategy. But we should recognize what we're doing. You know, we get up on our high horse about how we're free market economy and, you know, we're not for the government getting too involved. I think that's eroded quite a bit, in my opinion.
Tyler, I want to also bring you in on what we're still waiting for. We're still waiting for this case on birthright citizenship. What are the details of it? Again, that we might get any. Actually, as I say that, it does appear that the details of that case are coming in the Supreme Court. Tyler, stay with us for this. The Supreme Court striking down Trump's birthright citizen curbs. Again, the president attempting to curb the idea of birthright citizenship, something under the 14th Amendment. The Supreme Court striking down Trump's birthright citizenship curbs. Tyler, what more details can you give us on this ruling?
Well, Dani, this really rejects a central plank of President Trump's immigration agenda. I was standing in this exact same spot back in April for the oral arguments in this case because President Trump was in the building behind me, becoming the first sitting president in U.S. history to attend oral arguments in person. You can hear, as the case is coming through, an applause that just came through. Now, the decision is not necessarily surprising, right? We got those signals from the justices. President Trump himself had even indicated that he did not think that the justices were going to rule in his favor because they really seemed to signal that they were skeptical of that attempt to end automatic citizenship under this executive order that President Trump signed on his very first day in office, which essentially would have restricted birthright citizenship to those with at least one parent who was a U.S. citizen or green card holder, which meant that children born to those on temporary visas would not be eligible, for example. And we even had the Chief Justice, John Roberts, say that the administration's argument was, quote, quirky. It essentially rested on 5 words of the Citizenship Clause of the 14th Amendment, which says that if you are born in the U.S. and, quote, subject to the jurisdiction thereof, then you are a U.S. citizen. And the administration had argued that this should not apply that broadly, that essentially those words require parents to be permanently and legally settled in the U.S. We heard this word domiciled thrown around a lot during the arguments. The administration saying that parents had to show that they had this intent to permanently stay within the United States. Now, I need to go through exactly which arguments the justices picked up on, but clearly siding with the opponents to that executive order that said that this has been long-standing legal precedent. Dani, we spoke about this before, but really wide-ranging impacts here as it protects that right. It could have impacted about 255,000 children that are born to undocumented immigrants each year here in the U.S.
All right, Tyler, we'll let you go through the details. This is all coming fast and hard. And still around the table with us is David Weston, and joining us now is Miles Miller, Bloomberg senior national reporter. Miles, just how big of a blow is this to the president's immigration plans for this United States?
It's a huge blow, and specifically because it was one of the first executive orders he signed immediately after taking office. I think just at issue here was 28 words in the clause in Section 1 of the 14th Amendment, right? All persons born to naturalized in the United States are subject to the jurisdiction thereof are citizens of the United States and states in wherein they reside. When you think about it and take it in totality, right, what this could have meant was that kids born in the United States to parents who were not U.S. citizens or who were here on visas would be stateless. We saw this happen in Ireland, right? People who, after Ireland got rid of birthright citizenship were basically stuck. Families who would want to travel can't travel with the one kid who's born after 2005 because of the change. And that very much was what could have happened here. It sort of now throws the president's immigration agenda sort of into a flurry. And then, what is left to figure out is what happens with USCIS. Do they rescind their implementation plan for this? Does it sit dormant? Is there further litigation risk? There's a lot of questions still unanswered, but a big win for people in the immigration community who were saying that this was fundamentally going to change the way that the U.S. has operated for 150 years.
Certainly not all these decisions going in Trump's favor. Again, this is one that decidedly is not. David, and I know we were talking in the commercial break, but before this decision that you had just been looking, again, just how consequential this would have been if the Supreme Court upheld this executive order from the Trump administration.
Yeah, it would have been enormous. I mean, I think it would only apply to the people under the executive order after they issued it. But I looked it up and it says there's something like 1.7 million people living in the United States right now who would be subject to the birthright citizenship. So it is enormously consequential. At the same time, Dani, as we also were talking about, I think we can't read this without paying attention to the temporary protected status that has now been taken away from the Haitians and the Syrians. By the way, there are other countries coming up, and we're talking of potentially hundreds of thousands of people that could be subject to deportation. So it is a setback for the president, as Miles correctly says. It was the first thing he did when he got to office, so it's terribly important to him. But there are still a lot of people that he's looking to deport, even with this decision.
How are you thinking David, just about the court and the makeup of the court, given the decisions that we've gotten, that some, again, have gone in favor of the president, but even decisions that are somewhat similar, of a similar flavor about independent agencies and the Fed, that those two have gone in different directions, for example.
Yeah, well, the law's complicated, and hard cases make bad law often, I must just say, having read through this, but I'm a little bit partial to the Supreme Court. I worked up there for a year, and I think they're being lawyers, and they're going through it carefully, and they have different points of view, and they disagree with each other, but they're not legislators, and they're trying to pick their way through some very difficult issues very carefully. I will say, just having read the syllabus, I haven't read the whole opinion, but there's a syllabus at the top of the Supreme Court opinions. It doesn't look like it was a very close case. I mean, they basically rejected all of it. They go back to English common law and bring it forward, including when the 14th Amendment was adopted, and it doesn't look like they found too much difficulty in coming out this way, which I don't think is a big surprise to Supreme Court watchers. I mean, it was a strained argument I think the government was having to make.
And Tyler, I know you've been looking through some of the details of the case now too. I mean, granted, it's only been 6 minutes since this has come out, so understood it's a quick read through. Any more details that you're picking up on this decision?
Well, Dani, we saw the Chief Justice John Roberts write the majority opinion in this case. I bring that up because that's pretty significant, including the fact that we've seen the Chief Justice so far this week side with the liberals on all of those cases that went against President Trump, alluding to the conversation that you both were just having there about how the makeup of the Supreme Court has impacted the agenda. Because while we have broadly seen the Supreme Court hold up a lot of the executive authority that President Trump has been able to put forward so far this term, there have been these really monumental cases. I'm thinking about the tariffs, for example, as well as this case, since we know that so much of the immigration agenda was on this, as previously mentioned. This was one of the first executive orders. But as the Chief Justice writes, and as I mentioned before, this really does come down to those 5 words in the Citizenship Clause of the 14th Amendment. He wrote in part, quote, "Children born to parents who are in the United States unlawfully or temporarily are born in the United States and subject to the jurisdiction thereof under the Constitution. They are citizens at birth." That makes it pretty clear that this court took issue with how the Trump administration framed its argument, saying that this provision should not apply broadly.
Miles?
Yeah, this is a big signal that the Supreme Court has made today, basically saying that a president can't rewrite a ratified constitutional amendment unilaterally by executive order. As you look through the dissent here, right, and looking at Thomas's dissent, he basically said that he's not sure that today's opinion will stand the test of time. In Alito's dissent, he calls it one of the most important decisions in the history of the court and says that the court made a serious mistake today. And then when you look at what Gorsuch said, basically that it's 2 competing views of the Citizenship Clause, one rooted in English common law and the other not. But when you looked at the oral arguments, right, one thing that stood out when the Solicitor General tried to make the case that we're in a new world and that 8 billion people are a plane ride away from having a child born in the United States. You got a signal from Chief Justice Roberts saying, well, it is a new world, but it's still the same Constitution, right? And I think that for a court that has fundamentally remade a lot of settled law, what we thought was settled law, here is a court that is, in this case, saying this appears settled and, we move on.
Yeah, Dani, I want to revisit something we were talking about before, that elections have consequences.
Yes.
I think if you take this all together, sort of in a broad sense, they have consequences, but not too many consequences. The president doesn't get to do whatever he wants to do whenever he wants to do it.
It has felt like that lately, though, just given the executive orders, not just from Trump, but from Biden, from Obama as well, that this is an administrative branch that's been using executive orders more forcefully than in the past.
And whether we agree or disagree with these decisions, and we could take issues with any of them, from my point of view, the courts are doing what they were supposed to do, which is being some ballast in the boat. So it sort of keeps it steady. It doesn't mean it can't move, it can't change directions, but it can't move too fast and too much. And that's where I take, as it was pointed out by the Chief Justice, sometimes with the liberals, sometimes with conservatives, and in the media, sometimes we are too reductionist and saying there are Republican justices and Democratic, and they have their points of view. But I would take, at least away from this, that there's some ballast in the boat. It can move, but it can't move too fast, too far.
I will just contend it's probably not just the media who frames it that way, that politicians themselves, and Tyler, I want to bring you in on this point specifically. We talked a little bit about the campaign financing case and what that would do for the midterms. I just wonder, taken as a whole, how we should be viewing some of these decisions heading into the 2026 midterms.
That's a really good question, Dani. At this point, we're going to have to see how it shakes out because, as I mentioned before, a lot of these, the main focus for voters is going to be the economy, though we have seen President Trump in some ways be able to exert his authority, expand his authority, thinking about that case yesterday when it comes to the agency heads of independent agencies, though President Trump himself conceded that he doesn't think there's going to be any more firings. Immigration is going to be one of those top issues. It's one of those issues that helped propel President Trump into office. It consistently voted closer to second below the economy if we look back to our Bloomberg News polling heading in to the 2024 election. But at this point, we're going to have to see how the voters really feel about these Supreme Court cases because by and large, this case today has really broad implications, but some of the other ones, I'm not sure if they're going to immediately resonate. For example, our write-up of that campaign finance one says that this will have major implications, but it was quietly done. It wasn't on a lot of people's radar, so I think it may be a little bit more under the radar in terms of what's actually going to resonate when it comes to voters heading to the polls in November.
David, just to go back to this point you've made about, not being too reductionist, I thought it was interesting on the SCOTUS blog, they're talking about, okay, you have 6-3, this decision against President Trump, with 2 of his appointees deciding against him, and tariffs was the same. 6-3 also. And I mean, the president has not been shy about voicing his opinions about the Supreme Court. Yesterday, he was celebrating his win in the FTC case. And I kind of wonder what this does to the political environment to have the Supreme Court decisions, again, not just in the way the media covers it, but how the White House moves forward from here.
Well, there's a reason the Constitution gives lifetime tenure to Article 3 judges, including Supreme Court justices, so that the president obviously has the right to express his view and condemn it and criticize all of those things. He doesn't have the right to remove Supreme Court justices just because he doesn't like the way they decided. And there's a reason we do that, again, sort of for the ballast in the boat. So, sure, he's not going to like that very much. But the fact that we can't just predict every Supreme Court vote according to who appointed the justice, I think actually is good. Good for the country, but also good for business. I mean, I don't think that American business would like it. If, in fact, we just go back and forth based on partisan lines. And that might be good for some parts of media, but it's not particularly good for business or the economy, in my opinion.
One interesting thing in reading is, obviously the makeup of this court has been, it is what it is. But you've got Ketanji Brown Jackson, first black woman on the Supreme Court, going up against Clarence Thomas. And she basically, in her dissent, said, you have, for the entirety of your career, talked about colorblind justice. And now you're going back against this, saying that the 14th Amendment was only for freed slaves and that it should not be applied writ large. It is a shocking and, frankly, bold call-out and a fight between the 2 black justices who sit on the Supreme Court. And then it's very interesting. It'll be interesting to see how they continue to have these kind of discussions, throughout the years.
So I'm going to be partisan for the court here for a second. I think that's part of the strength of the court, that they can have those disagreements with her in public and go back and forth. And it is a check on both of them. Having been up there, I was there when Brennan and Rehnquist were going at it all the time in their footnotes with a very liberal justice and a very conservative justice. And that makes the decision making in general, on average, over time better, because they have to deal with the other side. They can't just decide it and go on. They have to deal with that and maybe feel a little squeamish about some of the things that they're just saying.
Do you think, though, that this is a voting populace who have looked at a lot of these decisions, allowing for more finance to come into the world of campaigning from these companies, overturning of Roe v. Wade, even today's decision about transgender athletes? It does feel like it is an American populace who feels, especially on the liberal side, that it is a president who has had a lot of his appointees on, and it has, in some ways, remade the court.
Well, yes. I mean, I think that's fair. As you said, from the liberal point of view, it's also possible the country's moved, you know, and that maybe the court sort of in general, on average over time, it's not just responding one for one, but in general is moving along with some of the climate in the country, you know, and that's really what's going on. I think that's often what happens. It doesn't respond immediately, but it does reflect over what the country it wants and its values. By the way, which is healthy. If you had a court going one way and the entire country going another way, it wouldn't have authority for very long.
And I mean, it is happening on the 250th birthday of America, which feels apt and notable. And just going back to this birthright citizenship case, Miles, I mean, this is something with like over 100 years of precedent. So in terms of keeping things steady, you mentioned that quote from Roberts, "It's a new world, it's the same Constitution." So what sort of air of continuity does just this case alone give the Supreme Court?
Yeah, I mean, I think this is, you know, for people who look back to what they call the rollback of Roe v. Wade and some other cases like this, this sort of gives folks confidence that this is not a Supreme Court that can be predicted, right? This is not a Supreme Court. You know, I think you saw it yesterday with Amy Coney Barrett you know, joining in some of these majority opinions in which people may think she would have joined the dissent. You know, the Roberts Court, I think, will continue to go down as an unpredictable one in many ways. And I think that you saw that here today. You saw that in some of the other decisions. But this is a significant blow to the immigration agenda for the country. The president came in with these really lofty ideas about ways to change up the immigration system. And whether it's this decision from the Supreme Court or some of the issues he had in Minnesota and elsewhere, they really are starting a rethinking of what the immigration agenda will be in this country. And birthright citizenship very clearly will not be part of that.
Just taking a beat on what we've gotten from this Supreme Court over the past 24 hours. Yesterday, the Supreme Court ruling that mail ballots can arrive after Election Day, also allowing the Fed's Lisa Cook to stay in the Fed job for now while an investigation continues on again. And then on the other side of that, expanding the president's power when it comes to firing top officials, that revolving around an FTC slaughter case. Today, we got the Supreme Court allowing states to ban trans athletes from female teams, voiding political parties' spending caps in a win that has largely been seen for the GOP as they attempt to spend more into these 2026 midterms. And then finally, as Miles and David were just discussing, striking down Trump's birthright citizenship curbs. David, it is a lot. Well, it is a lot we've gotten just in the past 24 hours.
As you go through that, I think what that proves is they're human. We all put off the hard ones as long as we can until the last possible minute. I mean, that was true when I was up there. It was true. All the important stuff got put off to the end, and then there's a deadline, and you actually have to make the deadline and turn your homework in.
By one day, right? There was yesterday was supposed to be the last session.
But they're humans, just like the rest of us, and they're going back and forth, and they want to take their time on it. But then there's a deadline, and okay, fine, we got to release the decisions.
We do have a post from this president reacting to the decisions today. But to be specific, just to one decision, which is the one that went in his favor, which is maybe why he's writing this on Truth Social. He writes, a big win. The United States Supreme Court just ruled against men playing in women's sports. Wow, that takes a ridiculous situation off the table. President Donald J. Trump. He did something similar yesterday where he just talked about the FTC decision that allows him to let go of senior people in independent agencies, now maybe less independent. Again, not looking at some of the Lisa Cook stuff. Tyler Kendall joins us again. She is down at the Supreme Court. And Tyler, we were just talking about this, the huge amount of rulings that we have gotten in the past 24 hours. What sort of sticks out to you and what the Supreme Court has decided and what things have gone the president's way and which have not?
Well, Dani, as David was just saying, it is not unusual to see the Supreme Court put off some of the most contentious and contested cases to last. It's been really interesting, though, to see how the Chief Justice, John Roberts, in many of these cases that have gone against President Trump, has written the majority opinion and really solidified how the court feels about some of what they have argued is overreach by the Trump administration for some of these really central planks of the administration's agenda today. way when it comes to birthright citizenship. But then in other cases, as we've been going through, President Trump did come away with some really significant wins this week, perhaps most notably that FTC case where he now has essentially unilateral authority to remove those agency heads. If those agencies execute executive abilities, then the court says that they should be accountable to the chief executive. President Trump has had a very mixed relationship with the Supreme Court. In many ways, we have seen his executive authority, which he has really expanded unilaterally compared to previous administrations, bolstered under the Supreme Court. But we also haven't seen him shy away from trying to sway these justices. He has not shied away from expressing his dismay. As I mentioned, he became the first U.S. sitting president in modern history to ever attend oral arguments. He was sitting right in front of them when this case on birthright citizenship was heard. Perhaps the tide started to change when it came to his relationship with the court when we got that tariff ruling striking down his unilateral levies. Quite the week of hearings, but none of these cases necessarily surprising. The Supreme Court gave us basically all of the signals that we got today during the oral arguments earlier this year.
And again, that tariff decision, as David was talking about, had some of his appointees, two of them, siding against President Trump. The ruling that we just got, among the many, the Supreme Court upholding birthright citizenship. Miles, I know you continue to pore over that decision. What else is standing out to you this morning?
What's interesting is that Samuel Alito sort of very pointedly spoke about or wrote about sanctuary jurisdictions in ways that you don't normally see from a Supreme Court justice. He called border states defenseless. He took to task states that have these sanctuary city jurisdictions and that they get no help from local police. He said that these border states bear the brunt of illegal immigration. He also said that normally, or what had happened in the past, was that folks who came to this country illegally would usually fill the roles of dirty, dangerous, and sort of really tough jobs, and that's not what's happening now. What's also interesting is Brett Kavanaugh agreeing with the outcome today, but saying that he thinks that Congress should make a decision on this and Congress should legislate on this. Very interesting to hear. I mean, you'd think of it as settled law, but if, there's been no significant immigration policy that's made its way through Congress in quite some time, and you hear the Supreme Court saying, you know what, it may be time to make a change to that. But when you go back to what Alito said about sanctuary jurisdictions, it makes me think, what happens if these sanctuary cases make their way to
less than a minute here, but Justice Alito retiring now from the Supreme Court. You got like 20 seconds to give us your thoughts, David.
That? Well, a distinguished career. He's been there quite a while. He is clearly a conservative justice, to be reductionist, and good for him for his service.
Yeah.
But he's also, what is his age? It's up there. I mean, there was speculation about Alito.
There certainly was. Well, fitting to get for you reading his decision and then this retirement as well.
That
is his mic drop.
That's
Everyone,
right.
thank you so much. It's David Weston, Miles Miller, and Tyler Kendall on a busy day of Supreme Court rulings. This has been Bloomberg Open Interest.